Hi, this is John Lau from Bank of China International in Hong Kong with this week's recap of Asian markets. Hong Kong market will close slightly higher this week. Turnover remained high at 193 billion, more than the 108 billion daily average. China's Purchasing Managers Index dropped to 49.6 in April, its lowest level in 12 months. Efforts to cushion an economic slowdown have yet to revive the factories. Mainland stocks are still reacting positively to lower borrowing costs and expectations that the government will increase measures to boost economic growth. Recent economic data releases have been the weakest seen in years, as evidenced by the latest PMI figures. Baoding Tianwei Group became the first mainland state-owned company to default in the onshore bond market. This default follows privately owned Kaiser Group's failure to pay interest payments on Monday. The RMB remained stable at 6.19 to the US dollar. Turning to Japan, the Nikkei 225 rose nearly 2% this week, closing above 20,000 for the first time in 15 years. The last time it closed above 20,000 was on March 27, 2000, and it only lasted for 3 weeks. However, valuations are more attractive now, with stocks at 23 times earning instead of 100 times back then. Japan's trade balance swung to its first surplus since 2012, as exports in March rose 8.5% from the previous year. Imports fell 14.5%, more than expected. The weaker yen is boosting share prices of export-related companies. The Bank of Japan is due to meet on April 30th, and expectations are for a stable monetary policy in order to give more time for previous stimulus measures. The yen remained at 119.50 to the US dollar. Thank you, and have a good weekend.